So it was a major beat on the labor front on all parts of it, right? The initial jobless claims declined to 1.2 million, down 249,000 in just 1 week, well below consensus. Wall Street is looking for 1.4 million. Continuing claims, they also declined to 16.1 million, down 844,000. And pandemic unemployment assistance, that swooned to 655,000. It was above 900,000 just a week ago. Remember yesterday's ADP number? That was revised. The June number, the tally now, jobs created, 4.3 million. Initially, they thought it was 2.4 million. Now, all of this dovetails with better data on the economy and the service economy. Now, I know it sounds nuts and against conventional wisdom of all the talking heads, but I think the V is getting stronger. So am I nuts? Well, let's ask Keith Fitzgerald of the Keith Fitzgerald Group. He's the principal there. Crescent Wealth Management's Jack Ablin. And Walser Wealth Management President Rebecca Walser. Rebecca, am I nuts? I mean, I'm looking at the data. That's all I'm looking at is the data, and it's getting stronger.
It is, Charles. So there's no stopping the American ingenuity of the machine of the economic growth engine. So any kind of good news I'll take right now. And I see the light like you see the light. I'm so excited that we had this great number today, 1.2 million, definitely lower than expected. And also the ISM, manufacturing, all these things, positive news. And I think that you could be onto something that we could be getting to a V. Yes, a check mark.
You know, Jack, I want to go to you. I know you and I have talked a lot. We all were kind of cautious. Maybe you were a little bit more cautious the last time we spoke. But some of these things have gone past that V, and they are looking sort of like a check mark. They kind of remind me of the NASDAQ. All right. So is it just, and I think the reason I'm optimistic is because of all the stops that we had, the stalling of reopening, some lockdowns put back into place. I think the number could have been a lot worse today, any of these numbers in the last week, and they haven't been.
Yeah, I think Americans are self-selecting. They certainly need the confidence to go out, and some Americans do. I am looking at high-frequency data. We are seeing some pullbacks in, reservations for dinner, and it does tend to lead infections. So it's a really interesting barometer. I will also caution about the ISM and that data, because it is diffusion data. It's just showing growth, not necessarily the level of growth, but it is certainly strong. So I don't want to take anything away from the data. But, my view is I think rather than a V, I think, or a check mark, I think it's really going to be more like a square root sign, where we're going to get back to roughly 3 or 4% below where we started the year and kind of level off for a while.
Well, let's talk about this COVID economy for a moment, because these stocks are absolutely crushing it. In fact, I would say the stock of the day, not for the way the stock is performing, but for the news, is Etsy. Just take a look at the numbers there, the kind of growth they've seen. But these stocks themselves have become a little bit wobbly. And so I think people who are in them probably should hold them. But, Keith Fitzgerald, there's a debate on whether you should close these ideas or stick with the strategy of buying on dips. The COVID economy, the COVID stocks, are they still worth a look here?
Well, of course they are, Charles. You never want to try to second guess the markets. Let the markets make the decision for you. Have something as simple as a trailing stop that lets you ride these things higher. And if they reverse, you know what? The market has told you to get out. Don't second guess the opportunity that's in front of you.
All right. I'm a contrarian. And so when I saw this morning, it really caught my attention, right? It's sort of along the same line of thinking, but it's Goldman saying that a vaccine could upend this rally, and saying that few people are prepared for what happens if let's just say we get a vaccine in November. So I want to know how you're positioning your portfolios. How should people be positioned? Rebecca, let's say we do get a vaccine. It does change a lot of things with the market, right?
I mean, obviously, for sure that, hopefully we'll get back to some kind of whatever the new normal is and getting back out with, confidence. If there's a vaccine, we should be able to get back out with confidence. And a 70% consumer-driven economy, Charles, while I can understand that will change sort of some of the strong players that we've had so far, some of the sectors have been so strong this year, it also does reopen retail and travel and a lot of other things that we aren't seeing that are really weak this year. So I don't necessarily agree that we'll see the end of kind of this rally. And I think that it'll get us back to a new normal. So I look forward to it. I really still, Charles, want a plan B without a vaccine, because I'm kind of skeptical that a vaccine is going to be our end-all be-all savior.
Okay, well, that's maybe we'll do a different a different show on that real soon. But Jack, I do want to ask. Today the transpos look fantastic, and one of the driving factors there, besides the truckers and the rails, American Airlines and their 50-day moving average. You just talked about restaurants. Obviously, a vaccine turns that whole thing upside down, right? We will go, I would assume, back to restaurants and fly planes. But do you get out of a Zoom or an NVIDIA to go into a United Airlines, something like that?
Yeah, I mean, I guess that's the argument. I think a lot of these stay-at-home stocks, particularly tech, the high-quality names, have really been the safe haven. Investors in stocks are viewing their stock portfolio like bond portfolios. And I do think we will see, if vaccines announced and it looks promising, that we will see a reversion of growth back down and value back up. But I tend to agree. I'm going to take a more skeptical view. I'm willing to let opportunity get away from me in exchange for just keeping a cautious stance on the vaccine coming to market that quickly.
Right. And Keith, I think from a stock point of view, I mean, listen, the growth is working. These stocks are rallying. Etsy giving up some today. The reason I think people should hold, because I think it's going to turn around and go right back up. And that's been working. So you don't have to force the issue, although I know a whole lot of folks who are actually building positions in the cruise ship companies, in the airline stocks. How are you positioning your portfolio, thinking potentially we could get a vaccine sooner rather than later?
Well, I think cruises and airlines have gotten ahead of themselves. What I think the real key takeaway here is that everybody's looked at tech and said it's run up. What they're not realizing is the rest of the market's going to catch up. I think that's the gotcha if there's a vaccine, and that's what people aren't planning for right now.
Let's talk about volatility, folks, because it has calmed down dramatically. Your daily trading range is like 0.5% right now. Remember back in March, we were getting 9% a day moves, sometimes intraday 20%. So what does the calm after the storm mean for these markets? Keith, I'm going to go back to you.
Well, we've been writing about this all morning to our clients. This is typically a sign of a short-term reversal. That tells me I got to get ready to buy more stuff that I'm interested in, but it also tells me I need to be on guard. Beyond that, I'm not going to look a whole lot into the crystal ball, because the long-term thesis, the recovery is still there, whether it's a V or a square root sign like Jack talks about. I don't care as long as we've got the opportunity.
Rebecca, we're back to normal volatility. Is that a good thing for you?
I think it's a good thing for, obviously longer term people that are kind of spooked, Charles, when we have a March and we have a 30% drop, people are obviously not sticking with their plans. Emotional investing is always a problem. But for the short term investor, obviously they like the volatility. They can make some money on the short term buys, and that is not so great for them. But yeah, for the long term investor and the ones that get spooked, I think that, we need some steadiness, and we certainly need some steadiness before the election. I'm looking forward to that.
Jack, it's the calm after the storm, but is it also the calm before the storm?
I think it is. I mean, remarkably, I looked at VIX futures, too, to see, okay, we know VIX right now is pretty good, but what's VIX look like after the November election? Do we see a spike? Remarkably, no. So I'm not sure, that the options market is prepared for any volatility over the next few months, and perhaps we could be caught flat-footed if that's the assumption.
Well, the good thing is that we were caught flat-footed back in March, and we held our own. We held in there, and we're doing okay right now. Keith, Jack, Rebecca, thank you all very much. Always appreciate it.